You know, young rich niggas.
So welcome to this week's webinar. The subtitles for this video are auto-generated. So if you need the subtitles, you can just click on the small button written CC below this video. So as usual, we start our analysis with the dollar index. So on the weekly time frame, we are bearish, but on the weekly time frame, you can see that we had this previous support here, which was retested last week but one. And on the 4-hour time frame, the structure is even more clear. So I think what is happening with the dollar is that there is going to be some consolidation. Most likely, I think this is in anticipation of the Fed meeting. You know, on May 3rd, the Fed are supposed to announce the interest rates. So we are most likely going to see some consolidation on the dollar. So the Fed meeting is going to give us the market direction. So until then, we may see some consolidation. This is totally normal. This is a normal market behavior. So on the faster time frames, you can see that there was some rejection here, and the market started rising. So maybe the market will retest this weekly support again, rise, and then retest again, maybe before the next week, Wednesday, because that is when the Fed are meeting. Then the market will be ready to rise. So for the dollar index, on the 4-hour time frame, you see the structure is very clear. Now, if this is happening on the dollar index, of course we expect that EURUSD is doing the same, because remember, the dollar index is made up of almost 57% is the euro currency. You know, the dollar index is the dollar against is measured against a basket of 6 other currencies, of which the euro makes up the biggest part. So in some way, the EURUSD pair is inversely related to the dollar index. So what is happening to the dollar index, the opposite will happen to the EURUSD. So you can see the same thing for the euro dollar. So on the daily time frame, we have a structure here, some long-term resistance there. Of course, we have support here. So on the smaller time frames, on the faster time frames, just like the dollar index, of course, there's going to be some consolidation here. I don't expect to see a breakout, but the market will be consolidating here in anticipation of, the Fed meeting. So we are most likely going to see some consolidation, the opposite of what will be happening to the dollar index. So as the dollar index retest this 100.8, this point here, 100.80. Now for the EURUSD, we might be testing 1.107, and then coming down, and then maybe up again. Maybe by this time now, the Fed will have announced the interest rates, and then you can expect a breakout. Of course, this is the most likely scenario, but if we see a breakout to the upside, we'll have to validate using candlesticks. Of course, you have to see a good close above this resistance. Same case to the dollar index. If we see a breakout to the downside and the market closes way below this support, then we'll have to reanalyze our analysis on the dollar. Okay. Same case to the pound dollar. On the weekly time frame, you can see multiple rejections. And we've looked closely at these weekly candles for the GBPUSD. See, these are shooting star. Actually, these are shooting star. Just a minute. So you have a shooting star here, you have another shooting star here, and another here, and then we have a doji pattern here. Okay. So shooting star, doji. Of course, this shooting star is a sign of weakness, because as you can see, the market rose sharply, but by the close of the candle, the sellers came in and pushed the market back down. So we had this deep wick to the upside. And then finally we had a doji pattern here. A doji, it's the market closes, opens and closes at the same point. So the market went down or went up, but at the end of the close, it closed where it had opened. So this is an indecision, followed by a small bullish candle, and with a very high volume, even than the doji. And this small bullish candle has a higher volume than even the previous shooting stars. It looks like the market is really struggling, because if we had this big volume bar, and yet the market did not rise sharply, it means that the buyers are struggling to push this market higher. So at the close of this week's candle by Friday, maybe we'll have retested this support, this upper wick. It's clear on the daily time frame and on the H4. So this is the same pattern on the euro dollar and the dollar index. So by the close of this week, then we'll have retested these highs. So it's very clear on the daily time frame and also on the H4. So this is the structure on the daily time frame, and on H4 it's even more clear. So on the retest, maybe go down and then up again, Then finally we can expect a breakout after the Fed comes out and announces the rates next week. So this the euro Australian dollar, the pair has been rising since for some months now, and we are at a very, very critical level. Even if the market will rise from the current levels, I don't think that it will be at around this point. This resistance. See, these are very long-term resistance from October 2015, then again on 2019 again, 2020. So if the market breaks out of this resistance, then I think there is a possibility that that will be a very strong signal also for more upside. But it's very likely that we might see some rejection here, because again, if you look at these candles closely, see, this is a very big bullish candle. Yeah. First of all, the candle with the highest volume, the weekly candle with the highest volume, is this bearish candle, and it has higher volume even than this big bullish candle. And then you can see sellers coming very strongly here. So it's likely that this is where the professional money moved in, but then they are pushing the market higher just to test this resistance before the market can fall sharply. Again, if you look at the next candle after the bearish candle, it's very almost the same size as the bearish candle, but with even a smaller volume. You can see the volume here, and you can see the big volume here, and yet these candles are almost the same size, but the volume for this bullish candle is way small than the bearish one. Then after that we had the small candle. Of course, this is a very high volume for a small candle. And another thing here is that the volume of this small candle is bigger than the volume of the next candle, which is huge. It has more spread. It is more bullish than the previous candle, yet the volume is smaller. Then we have a doji pattern. Of course, the volume here is very high. A hanging man pattern. These are showing that there is a selling pressure coming in. So another high volume. So this week, my expectations are that we might close as a shooting star. So we might see some sharp rejection and then a shooting star pattern here, and then maybe can expect bears to come in from there. So we might tag this weekly resistance for EURUSD before you can expect the market to fall. Of course, this has been an uptrend since August 2022. So any downtrend will be, as you can see, this is a 1.42 from 1.65. That's more than 2,000 pips. Same structure on the Euro New Zealand dollar.